Hello and welcome to Pro Trader Strategies market commentary for Monday, September the 24th, and my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for commentary on everything from economic to geopolitical or market analysis. Please keep in mind that everything we talk about in these commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with economic data. All right, we're done with economic data because it's a Monday. We usually aren't getting that economic data, but we do have Mario Draghi speaking, who is the ECB president, a little bit later on today actually, he's probably speaking right around now. He's probably almost done, actually. Thought that was PM, not AM. Anyway, I haven't paid much attention, obviously, to Draghi. I don't think there was really a whole lot to hear what's coming out of that. We're already ahead of that by digging through all this data that we get on the economic picture. I know it probably just about as well as Draghi at this point. All right. APC, I don't know why I have that chart up there. We are going to talk about it, but a little bit early right now. Look at crude oil blasting off to the upside, almost up over $1.50 right now, towards that value area high. Just a big blast off today. Started out above the 61 Fibonacci extension. That acted as support almost immediately. And then the market just blasting off right through to where we are right around now, which is where the value area high is. That is going to be the resistance level right now. It's just when it starts getting a little overextended. I've talked about it. I don't think the economy is showing us enough economic data right now at this point to really get on board with a massive rally in crude oil. I just think it's maybe a little bit overdone at this point. I've talked about it many times. You get into that 70 handle, people start pulling back on driving when gas is well above $3 a gallon. We're just going to see a little bit of pullback, I think, especially heading into the winter season. Now that we are officially fall. Anyway, gold futures still holding on to that 1200 handle. You know, like I said, we're going to fight tooth and nail. The bulls are anyway, to try and maintain that level. As you can see, we've really started consolidating here, building out some value where time and volume is being spent. That's starting to gain acceptance for pricing at these levels. Then we go on to XRT. Now, we've accepted the prices here pretty much, but nobody is trading it. As you can see, when we first came out, there were some nice, good volumes, but this volume in this contract is dwindling daily. They're not even talking about it on mainstream media, which is also exacerbating this slow death in cryptocurrency. There needs to be some catalyst in order to jolt these markets to get back to where they were. I think that the market is just absolutely flooded with cryptocurrencies, and the retail investor, who is one that really wants these, can't really decide on which cryptocurrency they want, so therefore they're just not doing anything. It's analysis paralysis in a sense. They're too worried about one cryptocurrency missing out on another one, so therefore they're just really not doing anything from what I can tell. All right, bonds. We're down at these levels. I talked about it. I thought we were finding a nice little bottom here. I was almost a sure thing today. I didn't put on any trades for it, but I was almost assured that it was going to rally today. We are not seeing that with the bonds, just off slightly by a couple of ticks there. All right, we are getting the VIX starting to move higher. Trying to get back up into the teens. We're at 12.5 right now. Love to see it get back up to the 13, especially when we're in this. We have one window right here. We have 1 month. Right now is a great wheelhouse inside of 35 days to expiration. If we could get some volatility spikes going on in some of these before the earnings start coming around, we can take advantage of it. Not really seeing anything great right now, but this not looking like a very good pattern for the Dow Jones and the blue chip stocks. We've got the NASDAQ pushing higher by about 9 points. It actually is complete opposite. We looked at Friday's move and almost an engulfing bear candle there. Today we're getting some follow through to the upside. So came down, tested the 61 Fibonacci, and now we're starting to bounce up and away from that near the highs of the day. E-mini S&Ps, not fighting it. It's just a chart that looks just like the Dow Jones Industrial Average, albeit if both of these markets rally up to near unchanged by the close, it's going to look like a continuation pattern. Right now, we look like we have a confirmation pattern going on, but I haven't jumped on anything to take advantage of that right now. I'm just kind of letting it play out. It's a Monday, probably light volumes today, no economic data to go off of, so it's just going to be, the cage match between the bulls and the bears, trying to figure out what direction we're going to eventually go. Now, one thing to note, overnight session did get overly short. We even gapped out to the downside, consolidated back, no attempt to flush these guys out yet. So the shorts are still riding it out. I would expect this to at least come up and want to cover the gap here, but doesn't look like we might do that today. All right, on to a few things. I talked about this. I did get on my deer trade. I was able to put that on, so I tweeted that out on Friday. I have short deltas in the deer trade according to my rules, like the webinar, so check out the webinar. Also, APC, I covered this trade. If you guys remember, I did this on a chart setup where we basically did this on Thursday. So Thursday's webinar, we kind of vetted this one. It looked like a pretty good one because we had topped out, come down, but the day I put it on, obviously we rallied. Now it's broken above the value area high. Thought about playing out the probabilities on this, but when I got in this morning and started seeing this market rallying, broke my trading pattern, I decided, since I set this up as a technical trade, it broke the resistance to the upside. I decided to pull the ripcord on it. If you remember, I did the November 62.5 puts that I bought. Actually, I got long those, and I think I paid like right around $1.88. Let's say I was able to get out of those for $1.56. So was one of the first trades. Obviously, it's come back since then. So I sold the low of the day, it looks like, in a dark petroleum. And then Caterpillar is also that other trade that I have on, that I put on Friday as well. But I wanted to talk about the deer trade that I actually executed that trade and put that on as well. All right, that's about it for today's webinar, or today's market commentary. But this week is going to be jam-packed. I got two webinars I'm going to be doing. One is going to be on the long call spread, how to set that up. A couple of you guys were asking about that in Thursday's webinar as to why I wouldn't just set this up as a call spread or a put spread, the same or similar to the way I did a call, long put, and just add that short call or short put to it. I have specific rules around the call spread and the put spread from the long perspective. I'm going to go into those rules and as to why I have those rules specifically for call spread and put spread. So check that out Thursday. And then Friday, I'm going to be doing a webinar on strategy number 4, Steve Primo's strategy number 4. So I'm going to be talking about, if you want to save some margin rather than going out and buying stock and flipping those off of some of these swing trades and things of that nature, then you can do this with a much less margin intensive strategy. Therefore, you can increase the amount of trades you put on, therefore decreasing some of your risk, right? If we lay out a lot of different trades, then we play those probabilities that some are going to follow through. The other thing with that is, when you're trying to pick out of a list, okay, well, I only have so much money to allocate towards this, but I have 3 or 4 different stocks that are getting signals. How do I pick and choose which ones, right? This will allow you to pick more and add a bigger or increase that portfolio diversification by using options. So check that out. Friday, go to protraderstrategies.com and find out Wolfman doing the strategy number 4 trades. All right, so check those out. That's all I got for you. Other than, if you can't take that, take it easy.